We advise our investors to consider alternative strategies in response to rising interest rates, depending on their investment objectives and local market conditions. Here are a few alternatives. Number one, adjust your financing structure. Rising interest rates mean higher borrowing costs, which will reduce an investor's profit. No one wants to lock in today's high rates for 10, 15, 30 years. An alternative financing option is the 30-year ARM with a fixed rate for 5 years, but only a 3-year prepayment period. Lenders offers this option in even a 10-year interest-only period to start the 30-year term. Without principal payments, net cash flow after debt service increases and offsets higher rates. Higher equity contribution. Another option is to put more equity in the investment to lower the loan to value to the 60 to 65% loan to value range. After a year of sharp rate hikes by the Federal Reserve, lenders are concerned about falling property values and are offering better rates and terms for less risk at lower loan to value. Less debt means less risk for the borrower in an uncertain economy and a property market. And in the loan structure outlined above, the investor can always refinance long term without penalty should interest rates decrease over the next 3 to 5 years. 3, shift your investment strategy. If more equity is not available and higher debt service payments will drain your rental income, consider a fix and flip strategy instead of a buy and hold. Owner occupants still have a lot of cash and can buy your flip with 30-year mortgages insured by government agencies. These interest rates are lower than private lenders can offer because they are partially insured by these agencies. Investors can realize faster profits by flipping and don't want to deal with tenants in day-to-day property operations or pay 6 to 8% of your gross revenue to a property manager. Number 4, diversify your portfolio. Flipping for faster profits enables you to take some risk off the real estate table and diversify into other investments, including stocks, bonds, ETFs, unit trusts, and other public and private asset classes. Few of our clients are liquidating much of their real estate portfolios, while others are going full speed ahead with new investments. This is a good time to work with a financial advisor to diversify your entire portfolio to reduce your overall risk, volatility, and exposure to interest rate fluctuations, especially if you can see retirement on the horizon. Number 5, increase your asking rent. Rent increases account for 30 to 40% of today's higher inflation rates. Many investors fall into the habit of allowing unit rents to lag the general inflation rate, especially when trying to retain good tenants. Keep in mind that the apartment rents increased 10 to 20% in most markets over the past few years, while vacancy also dropped to historic lows. Your good tenants may not have better choices than nearby competitive properties. You need to start moving up your contract rents, especially if you're facing the maturity dates of low interest rate loans that must be refinanced at today's higher interest rates. The income side can offset the higher debt service that you're facing, but it's best to move up rents gradually. The amount of rent increase that tenants can absorb will vary based on the demographics and the cost of buying a typical home in your local market. Home prices are still high, and higher mortgage rates mean fewer tenants will have the option to buy homes in the near term. Investors need to develop a portfolio strategy that includes more than just real estate, especially in today's high interest rate and high inflation environments. The strategy should consider a variety of factors, including business and family financial planning, i.e., college and retirement saving, shifting market conditions, and risk management. The investor needs to decide on growth income or a balanced strategy. Leverage is a double edged sword that enhances returns in certain market cycles and destroys returns in down market cycles. In these uncertain times, one general rule may be less is more. When it comes to leveraging your real estate investments, that's a golden rule. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281 222 0433. I appreciate your time and have a good day.